Hello everyone and welcome to the latest episode of Trader Talks, and today we're going to talk about Alibaba. As always, I'm very keen to hear all of your thoughts. Please do remember to like, share, subscribe, comment, and also do remember that this presentation is for educational purposes only and should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. If you're listening on the podcast, do remember the link is in the bio to follow along on YouTube. We will look at the chart very shortly. The reason I'm talking about Alibaba is because I came across a tweet and then checked it myself to make sure it was true. That said and showed that it is currently the most oversold RSI recording on the daily chart in its history. We'll check that in a moment. And is that for a reason, or is that an opportunity for people to get into this stock? A quick summary of some of the analysis that I've done. Revenue is growing, up 3% year over year. Cloud and AI is accelerating, but near-term profits and free cash flow are being hit by spending on quick commerce, AI infrastructure, and user acquisition. So, profits and that free cash flow are probably the sort of the red flag at the moment, and they're under pressure while management are spending aggressively to protect their market share and build the next growth engine. For investors, I think at the moment, and again, let me know your thoughts, the key question is whether Alibaba's AI, cloud, and quick commerce investments can eventually translate back into some substantial earnings growth or not. There's also a couple other red flags as well. The China consumer backdrop is mixed. China retail sales just recently 0.6%, minus 0.6%. It fell for the year on year in May. But online retail sales of goods and services were still up 5.9% in January to May. So the macro backdrop is not especially strong, but online consumption continues to outperform broader retail. And also the geopolitical risk as well. Alibaba recently sued the US Department of Defense after being labeled a Chinese military company. The company says the designation has no basis in fact or in law. So a little bit about that there. So yeah, free cash flow, the red flag. Balance sheet relatively strong as well. $75.5 billion of cash, short investments, and other liquid treasury investments at the end of March 2026. So is it an opportunity? Well, let's have a look at the chart from a technical point of view. And this is just the RSI here trading now about 1665, no level really near that. The last time we were this low, you're sort of going back to, or the previous low before this, March 2023. So yeah, real sort of potential opportunity from an oversold perspective. But of course, markets can continue to go lower. This isn't, us saying that it's going to be the low either. When we zoom out and look at it on a week, it's obviously been on an incredible journey, hasn't it? Just from its IPO, to the low that was then formed in 2015, double bottom, of course, in 2023, but we did rally up to that all-time high of 445%. It was loved, and then it broke. And I remember talking about this a lot on our webinars that we did. Once it broke the trend line in August 2021, it just fell out of bed until it then hit that low. For those people that double bottomed and got in on October 2022, admittedly when a lot of the stock market bottomed, you're still up now. However, if you timed it perfectly and haven't taken profit, you've also seen a move that was up 230% now be a move that's only up 60%. So key levels where we're trading, one is literally where we are right now. And you can see the importance of this historically. And this is really going to be my focus in the short term. Do we stay above $95 or not? Last week we hit it as a support and we did close the week above. That's very key. Now, buying the dip there, of course, or averaging into it is one idea. The other is, waiting for it to show a little bit more, strength and get above these key resistance levels here. Admittedly, you'd have to wait for that for a little bit of confirmation, or it is, waiting for that RSI to get back above the 30 reading. Other levels a little bit below where we're trading that I would be interested in and keeping a watch on, around $80 here, which was the low from last January. It has, in fairness, since September last year, it's dropped 50%. It's a big move. Are we now in an area where maybe there's a little bit of an opportunity to get in to, recover. Ultimately, I think that the big test for this would come, if it does recover, in and around $116 and $120. It was a very key support last year, a key level support this year that then broke. So 116 key to the upside. And obviously this level we're trading at now, $95, very key to the downside. We'll have a quick look just at some moving averages just to see if we are near any of interest. Let me bring what day are we here? Week. So the 200-week moving average, we're below that there as well. And you can see historically just how important that has been. When we broke in 2021, I mentioned that trend line. It was also the 200-week moving average. We then got back above it after finding resistance in October. We then got back above it in March 2025, and it acted as a level support. We're below that there now. So whilst we are at some key support levels, we are below the 200-week moving average. So I would probably want to see RSI get above 30. I'd want to see the 200-week moving average act as a support level, not as a resistance level. And then we can maybe start seeing, a move to the upside. But again, I want to hear what you all think about this company. But yeah, a lot of Chinese stocks are struggling at the moment, in fairness. However, maybe behind the scenes, it's not as bad for Alibaba as it maybe does look. But those are the key levels that I think are worth keeping an eye on. Just going on to the daily chart, the 200-day moving average, you can see also has been very well respected. And again, this just shows the importance of keeping an eye on these levels. Support breaks and turns to resistance. So should we get a recovery, keep an eye on the 200-week moving average and the 200-day moving average as key levels. We'll probably discuss Nike on Wednesday after their earnings tomorrow, but any other stocks that you want looking at or assets in general, please do let me know. Until then, take care and see you next time.